Dear viewers, welcome to our channel GVS Bank Academy. Today I am going to discuss most important questions for revision part 3 for BFM question paper for forthcoming next Sunday examinations. Now we are planning to commence JAIIB classes from first week of June 2023. Already for CIB revision classes are in progress. Interested members are requested to contact on this number. Now, question number 1. External commercial borrowings availed by residents are governed by provisions of ECB guidelines are governed by the provisions of Section 6 of FEMA Act 1999. Section 6 of Foreign Exchange Management Act 1999. This is it. Question number 1. Question number 2. External commercial borrowing under automatic route, how much we can borrow without RBI permission? US dollar 750 million per year. US dollar 750 million per year. Question number 3. Nodal agency designated by Government of India to manage the Export Marketing Fund. Who is the nodal agency for the Export Marketing Fund? Exim Bank. Nodal agency for management of the Export Marketing Fund is Exim Bank. Now, question number 4. A shadow account of the nostro account, shadow account, mirror account maintained by the opening bank is called mirror account for reconciliation purpose. Reconciliation purpose. That is question number 4. Question number 5. Foreign currency exchangeable bonds. Foreign currency exchangeable bonds. These bonds issued under only approval route, permission from RBI and government, with a minimum maturity period of 5 years. One is approval route, second one minimum maturity is 5 years. These bonds are exchangeable into equity shares of another company. Bond is issuing one company, shares are allotted in another company called offered company. The all-in cost ceiling in this borrowing also as regulated by RBI. This is a unique foreign currency exchangeable bond, only and approval route. Minimum maturity period is 5 years. These bonds are exchangeable into equity shares and means bonds are issued by one company, shares. 6. Banks can essentially borrow money for the short term under LIF. This is 0.75% of their deposits. 7th, non-rate sensitive liabilities. Non-rate sensitive liabilities means along with market interest, these interest rates are not changes, no interest change. Capital, reserves, current deposits, these are non-rate sensitive liabilities. Even there is a change in interest, there is no effect on capital, reserves, current deposits. This is zero rate of interest. Non-rate sensitive asset size, cash balances with branches, cash balances with other accounts, fixed deposits also, fixed assets are also, fixed assets, other assets are all non-rate sensitive. Rate sensitive means whenever there is a change, the rate of interest may change. Non-rate sensitive means even there is a change in interest, that is not going to affect on cash balances, cash balance other bank, fixed assets, other assets. 9. Various types of foreign currency accounts. Foreign currency accounts. EFC, exchange earners foreign currency account, current account. 100% they can deposit in this account. RFCD, resident foreign currency domestic, resident foreign currency account, diamond dollar account. These accounts are there in foreign currency. Exchange earners foreign currency account, resident foreign currency domestic, resident foreign currency account, diamond dollar account. These are all are in foreign currency. Question number 10. An NRI or person of Indian origin can purchase shares up to 5% of paid-up capital of the Indian company. How much an NRI or how much a person of Indian origin can purchase the paid-up capital means 5%. All NRIs together, all person of Indian origin together, or all NRI and person of Indian origin together, they can purchase up to 10%. They cannot purchase more than 10% of paid-up capital. And all NRIs, all person of Indian origins, they can purchase maximum 10. They want to purchase beyond 10%, up to 24%. Shareholders general body meeting permission is required. Once again, an NRI or person of Indian origin can purchase shares up to 5% of paid-up capital of an Indian company. All NRIs, all plus person of Indian origin together, they can purchase 10% of paid. They cannot purchase more than 10%, provided the company taken a general body meeting permission, they can purchase up to 24% of paid-up capital. This is about. Question number 11. Principle of proportionality in ICAP implies internal capital adequacy assessment process. Main element under pillar number 2, supervisory review evaluation process. This is a board approved forward looking document having principle of proportionality. What is meant by principle of proportionality? Higher degree of sophistication in risk management is required based on complexity of banking operations. If the banking operations are complex in nature, they must have higher degree of sophistication in risk management. That is the principle of proportionality. 12. The strategy for actively managing the composition and mix of assets to liabilities, restructuring, balance sheet management. Balance sheet management in mixed assets. 13. At macro level, broader level, asset liability management involves formulation of critical business policies, efficient allocation of capital, designing of products with appropriating pricing strategies. Designing of products with appropriating pricing strategies. At macro level, ALM involves critical business policies, efficient allocation of capital, designing. Question number 14. Capital indexed bonds. Capital indexed bonds means these capital indexed bonds will provide protection only to the principal amount of the investment. Against inflation, only principal is protected. That is called capital indexed bonds. Inflation indexed bonds. These inflation indexed bonds provide protection both coupon interest and principal against inflation. Capital indexed bonds protection only to principal amount. Inflation indexed bonds coupon plus principal. 16. Very important. Simultaneous purchase and sale of government securities under open market operations by RBI, popularly known as Operation Twist. Simultaneous purchase, sale of government securities under OMO, popularly known as Operation Twist, involves purchasing government securities of longer maturities and selling equal amount with shorter maturities. So means purchasing 10,000, example, 10,000 crores of 10 years maturity securities and selling 1 year maturity securities. And amount is same, but maturity period is here longer maturities. Purchasing outstanding longer maturity securities from the market and selling in the market shorter duration mark to manage the yield in the market. This is the operational test. 17. Personal loans, consumer credit loans. What is the risk weight? 100% for CRAR purpose. 18. Yield to bond, YTM. Yield to maturity. YTM ante YTM. Yield to bond or yield to maturity of a bond is also called as internal rate of return. Bond, it yield to maturity. Yield to maturity of a bond is also called as IRR, internal rate of return of the bond. Internal rate of return of the bond. Yield to maturity. Yield to maturity of a bond is also called as, once again, yield to maturity of a bond is also called as internal rate of return of the bond, IRR. These are the 18 questions which may be very important for forthcoming Sunday. Thank you very much for all for extending. Thank you very much.